Mark Minervini has made famous the volatility contraction pattern. So what I'm going to do in this short video is show you several examples of volatility contraction patterns, talk to you about the common characteristics. You can start applying it to your own trading and go away and spot volatility contraction patterns setting up and be able to take advantage of them because they continuously repeat across many different stocks, crypto, forex, commodities, whatever it is you're trading. You're going to notice these volatility contraction patterns setting up. If you want to learn a little bit more about where volatility contraction patterns happen in the context of the Wyckoff price cycle, there are loads of videos on the channel. So let's get into it. So this is Kansas City Southern, and what you can see here is a volatility contraction pattern set up. So the first thing you're going to want to note, and what Mark talks about in his books, is that the stock must be in a prior uptrend. So you can see that the stock is coming off of a prior uptrend, and then what we're looking to do with the volatility contraction pattern is take advantage of a period of consolidation where supply is being absorbed, weak hands are being removed before the continuation of the uptrend. So remember, and this is what we study in the Wyckoff method as well, markets move in one or two ways. So they move in trending environments or they move in non-trending environments. So it's this non-trending period, okay, and here this is non-trending. And what we're trying to do is take advantage when it goes back to the trending environment, okay, and that's going to be what Jesse Livermore referred to as well, is the point of least resistance, the pivot point. That's where you're looking to enter the stock. So where that arrow is pointing to, that's going to be the entry for this pivot spring strategy. So let's just clear the chart and talk a little bit more about it. So this is going to be our entry point. Where that arrow is pointing, I'm going to highlight the bar as well and the associated volume bar as well too. So one thing you're going to want to look for is for supply to be decreasing as well as volatility to be decreasing as well. So let's just start on the supply, because remember, this is a non-trending environment, so we're looking for that period of absorption of supply to happen. So let's start by looking at the supply. So what we can see from left to right, okay, is supply S is decreasing, and what you can also note is the large bouts of demand that are coming into the stock as well, as noted by these volume bars, and also on the breakout itself there's an increase in demand. So we can see that long-term supply is decreasing and exponentially in the latter part of this structure here as well. And then what we want to do is look at, is the volatility of the price decreasing as well. So if we start just looking at the waves, okay, what you can see, just very crudely how I drew that, is you can see that these price waves here is the volatility of them is decreasing, okay? As we move over to the right hand side of the chart, we're making a structural higher low relative to the previous lower low that we saw within the structure. So we're making higher lows here, okay, we're coming up against resistance. We can see that supply is decreasing as well, and then what happens on the breakout bar itself, so where we highlighted yellow, I'm just going to clear that, where we highlighted yellow in here, what you can see, and this is going to be a common characteristic with successful breakouts, is you're going to see that increase in demand. So we've got supply decreasing, we've got volatility throughout the structure decreasing, and then when it comes to that pivot point, okay, the line of least resistance where we're looking to enter the trade, okay, I look to enter the trades at the end of the day on the daily time frame. That's just my preference, because what I want to do is be analyzing that candle bar as well. So for example, if I change my ink color, if we're looking at two different examples here, so if we've got a candle bar that looks like this, where we've got the open here and the close at the end of the day there, that's going to be very bullish. Remember, it's the pivot point, so this is where it's absolutely crucial to be paying attention, as opposed to something like this where we've got the open here and the close here, but what you can see is this huge supply shoot. My head's not blocking that. Okay, so what is this indicating to you? If this bar here was, if we're calling this number 1 and this number 2, if at this pivot point here where we're looking to enter on that breakout bar itself at the end of the day at the close, what we want to make sure is that the close is going to be above that pivot point, so it's above the resistance of $125.92. So what we want to see is the open down near the low of the day and the close near the high of the day. What's that suggesting to us? It's suggesting there's a lot of pent up demand there, and especially if we see a big volume bar coming through as well. If we see something like the second bar, okay, at this pivot point here, what's that indicating to as well? We had the open in here near the low of the day relative, and then we had prices try to commit above the high of the previous resistance, so this black line here around $125, but yet what happened? There was obviously a lot of supply to drive prices down towards the end of the day. So what's that indicating to you? Well, it's indicating that there's a lot of supply presence, so it probably means there's going to be a further period of absorption, or it could also mean, in the terms of Wyckoff and looking through the Wyckoff lens, this could actually be a distribution structure, and it could be an up thrust or an up thrust after distribution. So that's some of the characteristics we're looking for there, and you can see how well, okay, the stock, okay, it goes through that resistance point, the line of least resistance, the pivot point, and then it just takes off. So let's go look at one more. So what we've got here is Shopify. So let's just note what was the previous uptrend. We can clearly see that it's in a previous uptrend. So remember, we're going from the trending environment to the non-trending environment, and then back to the trending environment. So we're looking to take advantage of where prices moved from the non-trending and then back into the trending environment, that line of least resistance, that pivot point. So what do we know in Shopify? Well, let's start looking at this supply first and foremost. So we can see that the supply is decreasing, okay, from left to right, with a period of high supply earlier in the structure relative to what we've seen previous. But as price is approaching, note what's happening to the pullbacks as well. So if we start looking at the volatility of the structure, okay, what do you know about the pullbacks? Okay, they're becoming very muted. Each reaction is getting less while supply is coming less, and you can also note these bars here, okay, and specifically later on in the structure as well, where demand is now prevailing over supply. So demand is prevailing over supply. This is a really key point that you want to see as well. So wide price spreads to the upside. Remember that we just looked at our previous candle bars. So what we want to see is bullish candle bars, okay, that look like this. Okay, some will also have long demand tails as well. So these are going to be your bullish candle bars. So these are what you're looking for in the context of the uptrend and in the latter part of this structure, like you can see on the rally. Okay, you can see many of these types of candle bars that I've just crudely drawn there, okay, in the context of this final rally attempt prior to the breakout bar. And just note this bar here, okay, if I just put a red circle around it. So this is why I wait to the end of the day, because what you can see here is you can see a supply shoot. So remember, and this is where we use our Wyckoff tape reading skills as well. So remember, we've got a supply shoot here, and we can go look at the size of the effort and what's the result to the upside. Again, got courses that teach all of this. There's loads of videos on the channel if you want to look at the Wyckoff overlay to the volatility contraction patterns. What we can see is a supply shoot here. So what's that suggesting to you? Price tried to commit above the resistance of $409 here, okay, but it actually closed down below the day. So what's that suggesting? There's still supply coming to the market. Further absorption needs to happen, and we can see that very small pullback in here. Supply stays nice and low before it reverses, and then what we can see on the breakout bar itself, if we were to draw that candle bar a little bit bigger, okay, on this breakout bar itself there's a tiny little wick at the top there, but what you can see, okay, this is a much more bullish candle bar. So again, it's trying to overlay the context of where are we in the price cycle, what's the structure that's been developing. Let's look at the volatility of the price, let's look at what's happening between supply and demand, effort versus result, if we're putting more of a Wyckoff spin on it as well, and then we're using our tape reading skills right at this pivot point here, because again, we're trying to maximize the chances of a successful outcome. So we know exactly where we're trying to enter on the breakout, on the close above that day. We want to see that bullish candle bar, we want to see that increase in demand, widespread to the upside, and then this thing to then just take off. So hopefully you found that interesting of how Mark Minervini uses his volatility contraction patterns. And again, if you want to go learn a little bit more about how to use the Wyckoff price cycle and the Wyckoff methodology for then looking for volatility contraction patterns, or what I call Wyckoff wave patterns, there's loads of videos on the chart, or go and check out the website www.wyckoffeducation.com.